Let us start with the next question. The following details of a company for the year ended 31st of March 2021 are given below. Operating leverage is 2. Is to 1 does not make a sense. Degree of combined leverage is 2.5. Is to 1 does not make a sense. Again, we have been given fixed cost excluding interest. So the operational fixed cost is given. Sales is given, 8% debentures is given, equity share capital is given, and income tax rate is given. There are 4 questions provided to us in the question. The first question is calculation of the DFL. I request all of you to make the calculation of the answer of the first question and put your answer in the chat box. So answer of the first question, in which we are required to find DFL. Dear students, we know that DCL is equal to DOL into DFL. So as far as the DFL is concerned, it is DCL upon DOL. DCL is 2.50 divided by 2. That comes to 1.25. That is the way the DFL can be calculated. Please write an answer. Second part of the question, it says that to calculate profit volume ratio and also earning per share. That is the question. Dear students, over here we are required to make the calculation of the PV ratio. For that, we will compute the contribution. Sales information have already been provided to us. So based on that, the PV ratio can be found. So I request all of you to write an answer along with me. For answer for the second question, working note number 1, calculation of contribution. Because friends, you can see that the information is provided to us, the fixed cost, and we have been given DOL, degree of operating leverage. So degree of operating leverage is equal to contribution upon EBIT. This is the formula that we apply, that is contribution minus fixed cost. So what is DOL? It is 2. What is contribution? Let us assign x variable to it. Divided by x minus, what is the amount of the fixed cost? 3,40,000. So x minus 3,40,000 is transferred on the opposite side. So it will go into the numerator. So 2x minus 6,80,000 is equal to x. X is transferred on this side, so it will become negative, and 680 is transferred on the opposite side, so it will become positive. So x is equal to 6,80,000, and that is the contribution. Next is calculation of profit volume ratio. It will be contribution upon sales into 100. What is the contribution? 6,80,000. What is the sales value? Sales value is an amount of rupees 50 lakhs into 100 for getting answer in percentage term. That comes to 13.6%. This is the way the PV ratio is calculated. The question says further that you are required to calculate the EPS. So in that case, let us see that how to make the calculation of earning per share. Calculation of earning per share. For that, whatever the details that have been provided to us, that will be used for calculation of EPS. So write an answer. I am preparing the entire statement just for understanding purpose. Otherwise, you may start from the in between also. Sales is an amount of 50 lakhs. Less variable cost is contribution. Amount of contribution is 6,80,000. So 50 lakhs minus 6,80,000. So 43 lakh, that is 20,000. That is found as balancing figure. Less fixed cost, that will give us EBIT. The amount of the EBIT is provided to us. Sorry, the amount of the fixed cost is given to us as 3,40,000. So EBIT is 3,40,000 once again. The question is providing the information about the 8% debentures of 30,25,000. So 30,25,000 into 8%. So that comes to an amount of 2,42,000. So EBT 98,000. Income tax rate is given to us in the question 30%. So earning after taxes is 70%. 68,600 friends. Divided by the number of equity shares. We have been provided with the information that equity share capital is 34 lakhs and face value is rupees 10. So number of equity shares are 3,40,000. It is 34 lakhs divided by 10. That is the way we are required to make the calculation of earning per share. It is 0.2018. This is the way the EPS can be calculated. Right on answer. Third part of the question. If the company belongs to an industry whose asset turnover ratio is 1.5, does it have high or low asset turnover? That is a question. So friends, over here, we are required to make the computation of the asset turnover ratio of this company. We have to compare the same with the industry, and based on that, say we are required to pass comment that does it have the high asset turnover ratio or low asset turnover ratio. Sales is provided to us 50 lakhs. Dear students, the asset turnover ratio is calculated as sales upon assets. Now directly or indirectly, no information is given about the assets. Okay, the assets information have not been given to us. However, on the liability side, say there are two information which are available to us. One is the equity share capital and another is debentures. So we can say that, say in absence of an information, this total would be the total current, that is the total assets. And accordingly, we will make the computation of the asset turnover ratio, since we don't have any other information. So let us answer the question. Third question answer. In that, calculation of asset turnover ratio. It will be found as sales upon assets. This is the way it will be calculated. What is the sales of the company given to us in the question? 50 lakhs. Since we don't have the information about the assets, so we are assuming that equity share capital plus debentures, total of both of them is the total assets. 50 lakhs upon amount of the equity share capital is given to us, an amount of 34 lakhs plus amount of the debentures is given 30,25,000. So 50 lakhs upon 64,25,000. This is the way we will make the computation of asset turnover ratio. 50 divided by 64.25, 0.7782. Now friends, this answer which we have calculated is what you can say is approximately like very near to, approximately half of the industry asset turnover ratio. 1.5, half of that is 0.75. So we can say that the asset turnover ratio of the company is very poor and the company should improve it. This is the way we are required to pass comment. So let us answer the question. Asset turnover ratio is very less in comparison to industry, comma, it is not a good sign. That is what we understand. I am dictating a small note to you. In absence of any information about assets, comma, we assume that total of equity share capital and debentures is total assets. Full stop. Preferably friends, this note that we should write in examination on a safer side. At what level of the sales earning before taxes of the company will be equal to zero? That is the question. Dear students, we understand for the fourth question answer. Understand my point carefully. Working note number 1, calculation of percentage change in sales. Sales and earning before taxes. This relationship is measured by DCL. So what we can do? DCL is equal to percentage change in EBT divided by percentage change in sales. This is the formula that we have to write. So percentage change in sales is equal to percentage change in EBT divided by DCL. The question says that the earning before taxes is like going down to zero, means it is like there is 100% change in the earning before taxes. So numerator is negative 100% divided by DCL. What is the degree of combined leverage, friends? Degree of combined leverage is given to us in the question. That is 2.50. So 100 upon 2.5, that comes to negative 40%. After making this calculation, we can say that calculation of revised sales. How to compute a revised sales? It is current sales minus change in sales. Dear students, the current sales is given to us in the question 50 lakhs minus 40%, and that comes to an amount of 30 lakhs. This is the way we understand that the current sales will be 30 lakhs, at that point of time EBT will be 0. Please write down answer. Now friends, this is the way I have explained you the answer. However, as a student, you can have number of arguments with me for doing this answer. What what kind of arguments I just explained that to you. And doing answer like this is also acceptable as per the note that the institute has given. I am not dictating that answer to you, otherwise it will amount to more confusion. See what happens that's over here. The question is providing the information regarding sales, regarding fixed cost, regarding operating leverage. So what happens at say taking into account the operating leverage, taking into account the fixed cost, we have understood that say we can compute the contribution. And the amount of the contribution is 6,80,000. Then we have been provided with the debenture interest. It is 30,25,000 into 8%, 2,42,000. Earning before taxes, it will be 6,80,000 minus 2,42,000, 4,38,000. I'm sorry. Contribution minus fixed cost, 3,40,000. So EBIT is 3,40,000. Interest is 30,25,000 into 8%, 2,42,000. As far as earning before taxes is concerned, it is 98,000. So use the calculator, 340 upon 98, that comes to 3.4694. So what happens, friends, let's say this answer will change if at all we take into account the given information. So basically the information is not matching within itself. So we understand that's over here. So friends, over here, so there is absolutely mismatch of the information. That is the reason, so as far as the third part of the question is concerned, that you cannot even cross verify. But we can do answer by either of the method and we can put a note for the same. This is what we understand.